You make no friends in the pits and you take no prisoners. 1 minute you're up $500,000 in soybeans, and the next, boom, your kids don't go to college and they've repossessed your venti. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on Earth.
The Peter Schiff Show is on. Call in now. 855-4-SHIFT. That's 855-472-4433.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories, your freedom. The Peter Schiff Show.
Welcome back, everybody. It's Peter Schiff here at SchiffRadio.com. Open line Friday. No guests, just your calls. 855-4-SHIFT. There's got to be a lot on everybody's mind and a lot to talk about, so make sure and keep the calls coming, particularly because I've got to make sure I've got a voice, and so I need caller participation to take some of the pressure off of my vocal cords as I continue to struggle with my hoarse throat. But in any event, a wild ride yesterday, a lot of carnage in the last hour. If you don't know, the Dow Jones was off 512 points yesterday, one of the biggest shellackings point-wise in history. Nothing was spared. Everything went down except U.S. Treasuries. And, pretty much a bloodbath. But, gold, which was up earlier in the day, ended up down. But gold actually was only down about 0.5%, which means relative to everything else, gold did extremely well. A lot of people on television were pointing out that even gold went down. Gold really, really held up well. Gold stocks, on the other hand, did not. They were down about 5%. But the interesting thing is they didn't really make new lows. Because remember, earlier in the show, the gold stocks dropped 5% when the Dow was only down 2.5%, 3%. And then when the Dow sold off to down 5%, the gold stocks did not really make new lows. Now, why did the gold stocks get beat up so much, you would think? Because the price of gold really wasn't down very much. It's near record highs. I think what was going on is you had a lot of selling, margin call selling. You have very highly leveraged players in the market. And particularly in the last hour, things get thin. A lot of people trade with stops where they put automatic sell orders in at below key levels. And I think a lot of stops were hit in the last hour. And, on a Thursday, a warm Thursday in August, a lot of traders are probably taking off early for a 3-day Hampton weekend or something. And so there's probably a little bit less volume, and you start hitting these stops. Nobody's there to buy, and you get some exaggerated moves. So I think that's part of the problem. But I think this is a great opportunity in these stocks because I really can't think of many stocks and many businesses where the fundamentals are improving like you have in the gold market. Because take a look at most stocks. If you figure we are going back into recession, which I think finally more and more people on Wall Street are waking up to that reality. They don't realize how grim the reality is, that it's actually a depression we're in. But a lot of people on Wall Street thought that we were going to have a lot of growth. And now they are, second-guessing those assumptions. And as a result, they're, downgrading their outlook for the stock market and re-rating these companies lower. But if there's a recession, a lot of companies are going to see decreases to their earnings. And, look at the stocks that are leading the way down. In fact, the financials are making new lows on the day. Bank of America Corp, new 52-week low. Today, Citigroup, new 52-week low. Goldman Sachs, new 52-week low. And even though the Dow is up about 20 points, of course, it was up like 150 or 180 earlier in response to the jobs data that I will get to shortly. But then it sold off to down 50. You're getting a lot of weakness, though, in the financials, which are, again, leading the weakness today. But if we are going back into a recession, how does that impact earnings for most corporations? Well, their customers aren't going to be buying as much, and therefore earnings are going to fall. People have fewer jobs. They have less discretionary income. They have less wealth in the stock market and the real estate market. If credit is contracting around the world as a result of rising rates in Europe, that means European customers can buy less. So, a lot of companies are going to see their top lines fall in a recession. But what about the gold companies? if the price of gold is going to rise, and gold's up now about $9 on the GLD, which means it's eradicated yesterday's losses. So gold is now up slightly between yesterday and today, whereas the Dow is still down 500 points. But if people are going to buy gold as a safe haven from inflation or political uncertainty, whatever their reason is, if the recession is bullish for gold, then it's bullish for gold stocks because it means that their products are going up in price. They're going to make more money. Their top line revenues are going to grow. Meanwhile, the cost of production is going to go down. Remember, part of the reason that some of these companies had earnings were not good as expected was because of rising costs. Well, what's happening now? Oil prices now down back at below 90. We're at $87 a barrel. Some of the other currencies have come off, the Aussie dollar, the Canadian dollar. So you would imagine that some of the cost pressures are being taken off the miners exactly as their revenues are increasing. So the fundamentals for the gold mining industry are improving, in my opinion, even though the price of the shares is falling. So I think that is an opportunity for people who can assume the risk and understand these fundamentals to buy these stocks, especially when the media is already saying, you see, gold's not a safe haven. It is a safe haven, and, relative to everything else, it held up. Now, the currencies were also battered pretty hard yesterday. Not only the yen on the back of that Japanese intervention, but the Aussie dollar, the Canadian dollar were really beaten up pretty bad. The New Zealand dollar on the risk-off type of trade. The economy is weakening. Now, everybody had been bracing for a jobs report today that was going to be worse than expected. Some people were bracing for a negative number. And so when you had so many people looking for a negative number, we ended up with a positive surprise in that the number was not nearly as bad as people had feared. Now, it wasn't a good number. We created 117,000 new jobs, which is pretty anemic job creation. I mean, you need slightly over 100,000. I think you need about 125,000 just to absorb the new entrants and to keep the unemployment level stable. Now, the unemployment level did drop from 9.2 to 9.1, but that's because better than 100,000 people left the labor force. So had those people remained in the labor force, or had the labor force actually grown, then I'm sure that unemployment number would have inched higher. Now, of course, the unofficial number, the U2, also somehow drops from 16.2 from 16.1, despite the fact that over 100,000 people left the labor force. So not really sure how that happened. Now, factory payrolls did increase by about 24,000, so that's better than a drop. But, we need much, much bigger gains than that. Government shed a few jobs of the federal government. That's a step in the right direction, but unfortunately, we got a long way to go on that score. But the markets initially reacted to this bigger than expected number. The futures were up about 18 or 19 points. To say the Dow was up above 150 points. And within a half hour, the market was negative again, and we are negative, although the Dow just turned positive. NASDAQ's still off 20 points. A lot of technical damage was done. Remember, I talked about a key level at around 11,500, and I said if we close below that, it's really negative, and of course we did. And right now we're at 11,360. I think that we have clear sailing down to about 10,000. In fact, there's no real support for the Dow, no meaningful support until you get to around that 10,000 level. And I think there's been enough damage done to the market that we can go down there. Now, of course, by then, the markets would have put enough pressure on Ben Bernanke, and he will certainly cave and admit that he's doing QE3 if he hasn't already started QE3. I think he has. I think it's going on. He launched it in stealth mode, but he's going to have to admit that it's there because I think that's the only thing that's going to revive this market is if they know that a lot more money is about to be dropped from helicopters. But anyway, I'm going to continue talking about the economy, taking your calls at 855-4-SCHIFT when we come back from a few commercial messages. So make sure to stick around. We'll be right back.
The Peter Schiff Show. Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million. Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
I am back. Sorry about that. I had a phone call there. Anyway, we're back. Got a lot of callers on the line. Before I take the calls, I want to talk a little bit more about, the box that we're in here, because if, as I said, we're slipping back into recession right now, and even now the mainstream is considering the fact that we might be going back into a recession, what are we going to do? Because remember, normally, traditionally anyway, in a business cycle, by the time the economy rolls back into recession, you've had years and years of economic growth, right? You've created lots of jobs, so unemployment is down low, and interest rates are already pretty high because, after all, during the entire recovery, the Fed had been raising interest rates because, of course, during the preceding recession, the Fed had lowered interest rates in order to fight the recession. But as recovery takes hold, they take that support away and they begin to raise interest rates. So normally, when you start to go down for a new recession, the Fed has got interest rates way up there, and so they can fight the recession the way they do by lowering interest rates. And, of course, unemployment starts at a low level. Maybe unemployment is down to 4%, 5%, something like that. And so then you start the recession, and then unemployment might inch up to 7 or 8% or something like that. But think about where we are now at the beginning of what could be this next recession. Interest rates are still at zero because the Fed never raised them. So in other words, the typical, arrow in its quiver that it uses to fight recession, cutting interest rates, it doesn't have any of them because the quiver is empty. There's no arrows to fire. Rates are already at zero and they can't go any lower. And unemployment is already over 9%, and the recession hadn't even started. So how high could the unemployment rate go when you're starting at 9% before the economic contraction even begins? So we have never gone into a situation like this where we've started a recession with the U.S. economy in such bad shape, with the rate of unemployment so high, and with the level of interest rates already so low. So in other words, the Fed has no weapons. The government has no weapons. Now, can they have another round of stimulus? Remember, Congress just put on a whole big pretense about cutting government spending, even though they didn't really cut it. Are they now going to come back and pass a massive jobs spending program to fight off this recession, which is what they will normally do? Ask yourself that question. I mean, I think the only thing that they've got that they can realistically do is ask Ben Bernanke to go on the biggest money printing spree in U.S. history and have Ben Bernanke just buy everything. Print up money, buy up houses, buy stocks, buy bonds, buy everything in sight and flood the market with paper money and cross your fingers and hope for the best. Because I think that's the only policy they can have. Now, maybe could they somehow come back to Congress and get the Republicans to agree to big increases in government spending? Maybe they will. I don't know. I mean, they seem to cave on their principles pretty quickly, especially when we're back in recession. And they don't want to be blamed for making it worse. So, that's part of the problem. Whenever the government proposes a solution to the recession, everybody wants to vote for it. Because if you don't vote for it and it doesn't pass and the economy gets worse, then you're blamed for preventing the recovery. even though the program might make it worse, nobody wants to run the risk of being seen as the guy that prevented the economy from recovering. So